So I'm going to start and tell you a little bit about my story, and then from my story talk about generally what we learned from it and what I think is going to happen in this new space, which is called equity crowdfunding or investment crowdfunding. People usually associate crowdfunding with Kickstarter, and it's a donation-based platform that lets you raise money from the public by offering to build or make something. People would pre-purchase it. When I talk about crowdfunding, I'm talking about raising investment capital online, and it's something new. It's only been around maybe 18 months, 24 months at most. So okay, let me talk about our story first. My background is real estate development. We were buying this property here at H Street Northeast, which is next to Rock and Roll Hotel, 1300 block of H Street. And I'd done some large-scale real estate development, some stuff around here. And when we were buying this property, it was, I think, 2009 or 2010. And most of the capital providers in the market, not just this property, we were buying a number of properties in H Street. And H Street at that time was still, quote, an emerging neighborhood. A lot of the capital providers never heard of it, which was surprising to me. I went to sort of the traditional Wall Street players, never heard of H Street Northeast, and so I thought it was a strange disconnect, because when they looked at this, they saw a rundown buildings on the corridor. But when we looked at it, we saw this a crowd of thousands, tens of thousands of people at H Street Festival. Anybody who lived in this corridor or lived in downtown DC knew that H Street was an up-and-coming neighborhood, and there was a strong disconnect between the capital providers and the people who actually were the real drivers of real estate development and growth. So the reason is that there's a problem in how money flows into all assets, but I'll just talk about real estate. Every whether it's a bank, it's an investment fund, it's not their money, right? Someone else's money. They've actually pooled it. They pool money through fundraising from pension funds, or maybe you're raising money from insurance companies. But ultimately, most capital that's invested is invested by, in real estate industry called OPM, other people's money. There's one of the only ways to get scale traditionally is by raising a lot of other people's money, billions of dollars of pools, and deploying it. And one of the problems that happens as a result of that is obviously you have a lot of middlemen, a lot of fees in that process. Second is that you have very little transparency. In 2008 was a great example. Trillions of dollars of mortgages, subprime mortgages, and all different kinds of mortgages were purchased with other people's money, and people actually didn't know what they were buying. I mean, basically very little transparency into what people owned. Lots of investors lost a lot of money. There was poor transparency, and then also you have end up having a market inefficiency or unequal access, because pool money in billion-dollar pools, you end up with a handful of people making most of the capital allocating decisions, and so you end up with a bias in terms of where money should go. You have a bias in terms of what information you know versus what information is available in the market. So by pushing that down, you can actually have better decision making. So that was our basic idea, is what if we raise money directly from people online? At the time we called it online direct investment. Now people call it crowdfunding. And it's a pretty simple idea. Like, hey, why don't we be able to raise investments online? You can do everything else. You can buy books. You can buy cars online. Why can't you raise money online? Well, there's a good reason for it. The SEC, basically the securities framework for how U.S. Capital raising works, is basically prevented that. So we had to work with the SEC for I think it took about 9 months to get the SEC to sign off on our first offering, allow us to raise funding online from everybody, anybody, not just high net worth investors, but everybody. And that was what our first investment was. We took that property next to Rock and Roll Hotel, and we raised $325,000 from 175 people. The minimum investment was $100 a share, and I think the average investment was about $1,000. So you can see I guess maybe the average investment in this one was $2,000, a little more than almost $2,000. But what you saw basically were hundreds of people, all sorts of people from the community, all sorts of, it was only local people who invested. We only allowed local people to invest in this deal. So that was people from DC and Virginia. We couldn't get Maryland at the time on board. They came on later. So we basically ended up, we call it a local public offering because in many ways it's very similar to public offering. People also often call it a direct public offering, where you're not going through a underwriter or broker dealer like Goldman Sachs. You're going direct to the public. And we did it. It worked. It was interesting though because it took us 3 months to raise $325,000, which in real estate world, if you're talking large scale real estate, is not a lot of money. I was really frustrated at the end of 3 months, and then we did it again. I think we had $300,000 in 2 days. So that's the good thing with the internet is that there's a lot of scaling. Things move virally, and so this is another property that's actually we tested the waters for, and then actually now up on the site today, and we're offering shares of this property in Shaw at $100 a share. Again, similar model of a local public investment. DC, Maryland, and Virginia are all any resident is able to invest in it. And so that's basically how we ended up starting Fundrise. And then we basically transitioned Fundrise into a platform. I realized that an interesting opportunity was not real estate, but actually to be the technology business that supports this new paradigm of how money can get invested into real estate. So now I'm going to talk generally sort of like what did I learn from it, and I think what are some lessons for people who are thinking about equity or debt crowdfunding. So one of the main reasons that people invest in you, whether it's online or offline or banks, is because they trust you. And there's this, we probably get 5 or 10 real estate companies a day come to us and say, how do I post my investment? And they seem to think that there's like magic pixie fairies who will come and fund, just because it's on the internet, it will just get funded. I had a guy, a big real estate developer in DC, come to me and says, I want to raise $180 million. How do I put it on the website? And the reality is that if you're raising money from people invest in a relationship. If anybody's ever heard of syndicating, real estate syndication basically raising money from friends and families from relationships into real estate deals. And I always tell people anybody's ever syndicated knows exactly what I'm talking about, that the syndication business is first about the relationship and second about the deal. If you don't have a relationship and you show someone a deal, good luck to you. But if you have a relationship and they trust you and then you show them a deal, the deal is actually secondary to how much they trust you, how much do they think that you're competent, how much they think you have invested in the project yourself. And so online fundraising is not different. You need to build a relationship online with people. You build a track record, build a brand. People invest in the brand. Coca-Cola has a brand. Whole Foods has a brand. That's why you're basically investing into that brand. And if you don't have a brand online, don't expect anybody to invest in you. And so real estate developers are terrible online anything. They come to me. Biggest real estate developers in the world. They don't have Twitter handles. They don't have Facebook, and but they have whatever, $20 billion of real estate. They're nobody online. They don't matter. It doesn't matter who you are in real estate. You actually have, other than Donald Trump, who's a piece of work. Nobody in real estate has a brand. Period. And that's actually very hard for a real estate developer to recognize because they're used to being catered to, especially if you're a multi-billion dollar, multi-$100 million developer, to actually to recognize that in this space, some restaurateur has a bigger brand than you do. So and this is something we did on Fundrise. We created ways for people to build profiles, build followings. This is my profile. You can create a profile as an individual, and people can follow you. And you can also create a profile as a company. This is my small real estate company with my brother. I highlighted in red how many people are in my network. This is I think I have now 1,000 people or 1,100 people in our network. And that network are people who basically have joined it's a sort of like Twitter function. They're following us, but they're following us because they're interested in investing in our deals. And the follow function basically lets them get content from us, maybe articles, maybe market information, or maybe deal information. And so 1,000 people, I would say probably 1,000 people were following me. I could raise a few $1 million a year. So unlike a Twitter following where 1,000 followers doesn't actually mean that much. Maybe 1 million Twitter followers worth a few $1 million a year. But in this context, having followers generally is a sign of ability to raise more money. So I always tell the developers, start with building your relationship, engage online, gather your natural or organic social relationships. How many people do you know? If you're a real estate developer for 20 years, you probably have 1,000 people who know you, and you're not raising money from them because it was never efficient. It was never efficient to raise money from 1,000 people. That's like ludicrous. So basically, normally the people think that's ludicrous, right? To raise money from 1,000 people. Doing it online, it's like sending an email to 1,000 people. It's easy, right? I mean, an email to one person, email to 1,000 people is the same, right? You just type all. So we basically focus on creating basically a platform that lets you raise money for projects, but also build a following. If you have, I have developers doing multiple deals, and you can track their performance. You can track, are they paying on time? Have they paid people back? Do you know people who have invested in their deals? We allow you basically, if you choose to be a public investor, your friends can actually, Facebook or LinkedIn can connect with you. That's again about social validation, about having a brand. So those are things we've done. This is really, it's the beginning of a new era, because what happened is the Obama administration and Congress passed a bipartisan bill, maybe the only bipartisan bill I'm aware of that happened in the last 4 or 5 years. It's called the Jobs Act. Look at all the Republicans and Democrats standing together. So look at that over on the far left, our local representative, Eleanor Holmes Norton, very proud to be there. But the Jobs Act is a revolution in securities finance. It basically deregulates or re-regulates the smaller end of the spectrum of fundraising, so you can soon be able to raise up to $1 million from everybody and anybody without getting the SEC to sign off on your offering. So it's a complete change. Before, you couldn't raise money from the public without having a regulator clear it, whether it's a state regulator or federal regulator. Soon you're going to basically, as long as you follow certain rules and go through either a broker-dealer or a crowdfunding portal, you can raise money from the public. And also, they've already implemented a piece where you can raise money from any high net worth investor online or anywhere, simply by basically posting it on the internet. Now, just because you post, as you might imagine, you take a great real estate deal or any business and post it to the internet and say, you're going to make a lot of money. People on the internet are pretty skeptical, right? Oh, this is a great offering. This is a great investment. It's on the internet. It says it's going to make me a lot of money. So there's inherently a friction there, which is, typically you don't take a great investment and offer it to everybody and anybody. So there's usually we look for deals where they're really well capitalized, and you're looking for the public as a follow-on capital, not all of your capital. It's a little bit like a bank. If you really, really desperately need money, banks usually get very skeptical, and so do I, because it can often mean a sign of distress, or if something goes wrong, you don't have deep pockets, and you can't basically save a bit. How many businesses are great businesses that end up failing just because they have a temporary problem? Real estate happens all the time, temporary capitalization problems. Anyway, so Jobs Act, revolution. This is going to become, I think, I'm expecting it to be 100 across, real estate, healthcare, technology. Tens of billions of dollars going to flow this way. It's just going to be I think it's going to completely undermine how the financial system works today. Just like e-commerce in the 90s changed how commerce worked, so will internet change how capital works. And so anyways, that's the essence of the presentation. I'm sure there's lots of questions, but I don't want to go on too long. Thanks.